Wow, I am really happy for you to be able to reach this point in lesson number 7. But again, we just got to cover the disclaimer that this is for educational purposes only, and that this is not financial advice, that you consider the risks in trading, and this is to help you with the trading strategies that we're providing you. And today, what is extremely exciting is I'm going to show you the most powerful trading strategy out there, and it's based on breaks. Okay, now I'm just going to walk you through it. We kind of touched based on it on some of the previous lessons, but this is just to really help any individual on any time frame. So what you do is you pick the dominant time frame, okay, which is the bigger time frame, will always have a lot more influence in where the market is really going. Okay, so right here, for instance, this candlestick looked like it was going bullish. Okay, on a small time frame, you might think that this is wicking upwards. Right here, this little wick you can see. Okay, that might look like a bullish signal for you on a small time frame, but look at this. This candle just closes against that, and you can see this thing just not come back to that price and just keep on dropping and dropping. Okay, so the idea is to have the big time frame, and you only want to choose two time frames. Okay, one for direction, one for entry and exit strategies. Okay, so the actual day chart is going to be dominant over the 1 hour chart, and that's the way I like it. I like the day and the one. You can mix it up, but you want to just test it out, so you could either have the 4 hour then the 15-minute chart. Okay, the 4 hour trend is going to tell you the more dominant trend, so we obviously want to trade with the trend. So this is multiple time analysis, and you definitely want to practice this and in a real live market instead of just testing it how I'm going to show you. Okay, it's better to see a real situation present itself, then you'll have a better idea on how to implement the strategy. But the idea is finding, number one, a trend. Okay, we've talked about identifying a high and a lower high to start the trend, and then a lower high right here. Okay, so what we're going to be looking for is reasons to go back in to this trend right here. Okay, so some of you might see this right here. Okay, we're just going to kind of start it off. There might be buying opportunities here. Okay, just remember the idea of a trend is if it breaks the trend, it may end. Okay, that it has ended. So you would want these buying opportunities. So when it dips down, you're looking for the buying opportunity right here. So on a smaller time frame, there might be a trend line like on a 15-minute chart to break back up into this trend. Again, here we have a day chart coming towards the trend line. You're looking for a break back in to the upper trend. Again, pulling towards the trend line. If it's above the trend line, we want to buy it back up. Okay, and we're looking for that trade setup. And then here you can see it comes down and comes up. It doesn't go all the way to the top, so we kind of create a lower high, and it breaks the trend line. So that is our indicator that this methodology has ended. Okay, and we're looking for a possible trend line on the bottom here. Okay, so I'm going to just really help you understand this methodology here. Okay, so we do have this high and this high, and I'm going to kind of help you on more like a live situation. So once it pushes back up like this, you do have support there, so there's a reason to get in based on the break of support. Closes beyond the price, comes back and retests. As you can see, the price react, coming back down for a sell. Okay, you can see it kind of shuffle around. In this scenario right here, okay, I'm going to put a line right here. You got to imagine that you're looking for a market condition where it goes towards the trend line, and then you're looking for it to go against, going downwards. Okay, let's see if we can target that area right on the dot, hopefully. It's probably clear back here, huh? Maybe we should find a more immediate scenario here. Yeah, right here. Okay. So hopefully that makes sense to you. Basically, let's actually see if we can find a more current scenario. Okay, so this is slightly on a downtrend right now. like this. So what you're looking for in this scenario is breaks back into that downward trend. Okay, this is a better scenario. Let's try this. Okay, let's just go like this. So again, we're picking a swing low, either the wick or the body, to this low. So this is where we're going to be starting to be interested in this market when we draw this trend line here. We're going to be looking for dips to continue the upward trend. Okay, so what I'm going to be looking for is this situation. Okay, so on a day chart standpoint, we're looking for it to continue going upwards, but on a smaller time frame, like for instance the 1 hour chart, and it did the exact opposite for me. Let me do this again. Okay. Okay, let's do this. It's pulling back, guys. Sorry about that. So again, that's your indicator, is your trend line. Okay, see that black trend line? Okay, so you got to think that trend line, this is a wick. Okay, this is the wicking area, and it's dipped down, false break, pulling back up. Okay, and continue the trend. This is what we're talking about on the bigger time frame. So if you wanted to pause the video and look at that scenario, what we're looking for in this situation is a trend line break trading back into the day trend, because this one's more dominant, right? Remember, we actually changed these to different colors, so let's do that for you. Let's actually color it red for you this time. So this is the trend line I'm going to be interested in to trade back in the trend. So the ideal stop loss is behind the previous low. Okay, so we can kind of cover some of the trading plan itself. Is we're just looking for support, resistance, trend lines, stop losses above previous highs or lows, okay, or rejection points as well. So you can see that it was resistance over here acting as support. That's the reason why we want a stop loss there. And if this is truly an uptrend, then we will see the market rise. Okay, again, we're looking for this opportunity where the market sucks in. Okay, you got to think that this is the overall trend is the day chart, and then it breaks and closes above it, and that's where we want to enter. Stop loss there, and you can see if it's truly on an uptrend. Look at this thing fly. Okay, same thing here again. Another reason to draw your trend line, what you're looking for is slightly a 45-degree angle. As you can see, we have a high, a lower high, and this top. So the interest point that we're interested in is right here. You can keep your stop loss behind this little swing low, the previous low. And this is the exact opposite if you're looking at it as a downtrend. Okay, so the flip side of that. Okay, so you can think that you can color these lines the way you want to if it's going to help you with understanding where your entry, your exit, your take profit. Okay, and like I said, once you can identify like a good when the market is trending really heavily, I mean, this methodology is going to make you so happy. Look at that thing. Okay, what we're looking for on the 1 hour chart is we're trading, you don't have to take this trade downwards. Okay, that's the whole point. I'm talking about this trade right here, entering there, stop loss there, and just carrying it, and then maybe cashing out or having a trend line to stop you out. So here, this is the trend line we're interested in. Look at that entry right there, stop loss at the previous low. Okay, and this is just, I mean, it comes right back to the origination really quickly. Again, we have another trend line like this. Okay, and again, these don't have to work out, just to let you know. You do always want to consider the worst scenario, that it may not work out for you. That's why you want to consider your risk level, or I'm just going to kind of just walk you through this. So here's your entry point here, the close of the candle beyond this trend line here. Your stop loss either behind here or this wick low, and carry it up. Okay, you could either cash out right here, or you can simply look for this next setup like this. Okay, same concept. Break of the trend line, stop loss there. You can see this thing just rise. Look how powerful the system is, guys. I mean, again, we're just looking at ways to just connect these areas, gapping up, stop loss there. Okay, And I mean, just the possibilities of these trades working out is pretty impressive, as you can see. Okay, and here, this trade, depending on how you reacted, might have broken even. Okay, there was a counter trend trade opportunity. Again, the overall trend is down, so that is, this trade right here is a little bit riskier. Okay, just to give you like a heads up there. This is a situation where the trade did work out. I'm just telling you that this black line right here is telling us that the overall trend is up, and just because it pokes beyond it does not mean that this thing is going to continue dropping. That on a 1 hour standpoint, this is a wick, and you can see it's kind of an inverted head and shoulder pattern. Do you see that? So you can see that we could look for the break of this resistance here and then start to trade this upwards, because I mean this is a really steep trend line. But I mean, if you wanted to, the only problem about this is that, you know, how do you determine your stop loss, right? If you were there based on the close, or if you saw that pulling upwards, or you could have an obvious stop loss based on previous support resistance, then that could be a way to approach this. But you can see it comes back up. Okay, and like I said, once it's crossing this line here, that's just another, you can see the reaction here, but looking at how it reacted over here, this is obviously closed on the day chart perspective. Okay, and that means that we may start to look for selling opportunities. Okay, breaks of the downtrend. Okay, again, low and a higher low, and what we're looking for is a break, close, stop loss there. Okay, and so on and so forth. Okay, any question, guys? It's actually pretty amazing what you can do with trend lines, huh? Okay, so like I said, I mean, that's just the starting point right here. Let's just count how many trades. 1, 2, 3, 4, 5, 6, and 7, 8. One counter trend trade. 8, 9. So about 9 good trades with a good day trend, right? Okay. So you can see that these trades actually took about a day or two to set up, and then once you see the setup, then you draw your line, and then you can place your stop loss, take profit, and let the market do its thing. Okay. Typically, again, that's what you want to do is practice, and then you'll have a better idea of saying, okay, I'm confident in the way I draw trend lines. I'm not trying to sharpen it up like, you know, some of you might have looked at it like this way. Okay. And some of you might have saw this and just felt more comfortable because it is more of a 45-degree angle here. This one I feel a little comfortable with because of this and this point right here, pushing downwards, and then it re-breaks up. I mean, I like that type of scenario. Okay, usually typical lower drawdown in those kind of scenarios. I like this trend line. This trend line right here, look how established it is, you know. Okay, and like I said, you can actually use this methodology. Okay, let's actually look at the euro dollar here. Even this tumble down here, some of the idea that we talked about. Let's actually look at the 1 hour chart. Okay, you can use the 1 hour chart to be your dominant direction. Okay, so if you can establish and say, okay, well, it is an overall downtrend on the 1 hour standpoint. Okay, I'm going to try to find a good trend line like this. So if you see a high and a lower high like this, then there is going to be opportunities right here, and I'll draw a line right here to look for that and that. Okay, so once you establish, actually this would be right there. Okay, so once you establish this trend line right here, then we're going to be looking for reasons on a smaller time frame like the 15-minute chart to trade back into that trend. So you see this is the 1 hour trend line. Okay, so what you're looking for is the market to suck up and draw your trend line, look for the break. This will either you look for the trend line, support resistance line, break. It's kind of shuffled around a little bit, but as long as you kept your stop loss right there, then you can see taking upwards. And then when it crosses the 1 hour trend line, then you're out. Okay, it works the same way, saying that your the trend has ended that way. Okay, so let me just kind of go through this again with you on the 1 hour chart. Okay, actually let's actually look at a 4 hour perspective. Okay, and like I said, you don't want to kick around too much on your time frames to confuse you. Okay, you want to just stick with one being the dominant. So right here, per se, this is your dominant. You have at least 2 strong swing points you can refer to, and then after those 2 points are been established, what you're waiting for is this pullback and then a break back in. Okay, so let's actually look at that. I'm going to go ahead and kick down to this part right here. Okay, and I'm going to go ahead and go to the, let's go to the 15. Okay, so this is where we had that line. So really what you're looking for is trend lines that go in the upward swing. So we could change this one black. Let's see if we can, if it likes us. Alright, so this is the dominant trend, right? The 4 hour. The bigger time frame is always going to be more dominant in where the market wants to go. So here we have a break, continuation. Okay, and these are just lower drawdown type of trading scenarios. So you could look for the counter trend, but just realize when you're counter trending, it's a lot more risky. Okay, but once we see this trend line like this, okay, this is a beautiful setup. Okay, you might have considered this. I'm just saying that for those that are more beginners. This is something that you may have taken, but if you saw the sideways market, that would be something I'd be considering my stop loss to break even. But see how it kicks up like this? See how the market just, there was a lot of volume, and then you don't want to chase this. Okay, this methodology I'm trying to show you is only taking the trade against the 4 hour trend, which is down, okay, which is the dominant trend line. So here we have this trend line break. Here's your entry point based on the break. Again, the previous high is your stop loss. Okay, and you can even see that this market came back and retested and just went down right back to the origination point pretty easily. And like I said, look at this thing. It actually kept on going. So we actually had another opportunity right there. Okay, so it broke. This would be where, I mean, I might consider over here as my stop loss, but you can see how if you were to put it right there, you would have got wicked out possibly. So you want to give it some leeway. You want some obvious swing high and low for your stop loss like this. Okay, I like that. This is a good idea of a stop loss. Okay, so when it breaks, comes back, pushes back down. Okay, and see how this black line, like I said, if you have that line already established on your chart, when you see a downtrend on the 4 hour or the dominant time frame, then all you're looking for is a point like this for a break, or even considering these points and looking for that break. Okay, as you can see, this break about 50% is what it retraced to. Can you see that? Broke down, retraced about 50%. Stop loss right there. Okay, or this previous high right here. If you weren't able to see this before then, that would have been your stop loss. Okay, referring to the previous high, especially if it's a downtrend. Okay, so this market rushes up to that black line. What you're looking for is not, and this is a false break. Think of this as a wick, okay, on a bigger time frame. So what you're looking for on the smaller time frame is drawing a trend line like this. Either you're looking for this break, okay, for those that want to take this break, it's really steep, you're just taking the break itself, or something like that, okay, where it just kicks off, and then it like hops over. Okay, again, look at this thing. It rushes. See how it rushes up to this trend line? And think of this, guys. It is so tempting to buy it when it looks like a big white candlestick on a small time frame too. Okay, so the idea of this methodology is to keep everything really mechanical for you as you're looking for a break. Okay, so I'm just pulling this back, guys, and just where our starting point right here, one break. Okay, so we already know what we're going to enter is based on the break. We know our stop loss. We know our take profit levels. Either it's a origination point, or we can carry on a trend line on the top until it crosses it. Okay, this market sprungs up. Okay, you don't have to trade this scenario because it has a little bit more risk because you're trading against the overall trend. This is the trading setup that you're looking for. Again, this is a 15-minute chart, so this might have taken maybe a day or two to actually develop. That was your signal. Stop loss there. Look at this thing. Take profit to origination point. Again, a nice, beautiful setup. We have a swing low and a dip down, back up. Entry point there. Stop loss right around here. Kicking downwards. Okay, this market got kind of wild here. You might have thought, and I'm just kind of just emphasizing everything, is you might have taken this trade, so this might have lost your trade based on having a stop loss right there. Okay, because you want to consider, all the worst things to happen as well as the best things. Okay, so here in pip wise, beautiful trade, another trade. Okay, another trade, and another trade. And this one, there wasn't really a trend line to establish. Okay, and it crosses the trend line pretty heavily, so this market may start to switch directions, which it's currently at. Okay, so that's the idea of that methodology. Again, pick some favorite pairs. We kind of explained this in the previous video, is that you're just trying to trade back into the major trend. When the market is trending heavily, that methodology I just showed you with the multi-time frame analysis is just awesome. Okay. All right. So you want to just make sure that you can review those videos over and over again, just so you can get a real good feel of what currencies you want to trade. Okay. And I'm just going to cover some of the ideas for those that are really new. So for those that are new, just stick with the major, which is the euro dollar, the pound dollar, Swiss franc, and the USD yen. Okay, and just keep it simple as possible. Okay, as simple and easy is better for you. For those that are more advanced and probably trading live, is you can consider the more commodity-based currency pairs, which are the Aussie dollar, the US CAD, New Zealand dollar, and so on and so forth. Okay, those are the commodity pairs. And there's the major crosses and exotics. Here's an exotic, which is the Euro CAD. Okay. Some of the cross pairs, like the Aussie yen. Just realize that these markets are a lot more volatile, meaning that they move a lot quicker. So I'm just going to give you an example. This candlestick right here on the Aussie yen, let's see how big that is. 190 pips, guys. Okay, so it's a big candle. If you compared it to the US CAD, the same size candle may not compare. Okay, this is actually 192. So that's something that might be misleading for you as when you're trading, is the candle size of the actual chart can really offset you as a trader if you haven't traded that pair before. So that's why I was emphasizing, if you haven't practiced it, you haven't understand the behavior or how big of spreads it has, then yeah, you may struggle with that pair. But if you have practiced it, and typically the major fours are pretty easy to adapt to, it just makes it easier for you to trade with more consistency. All right. Okay. Does anybody have any questions at all? Really good stuff, right? Yeah. Okay, so let's actually talk about just trading plans in general. Okay, so what is your schedule like? If you are someone that is extremely busy, then I would actually say the day chart is going to be your best friend. Okay, you're looking for obvious trends, you're looking for obvious trade setups, and something that is just, as you can see here, we already covered some of these trade setups that we're just looking for probability. Okay, we're looking for how we can manage a risk overall and easy for us to trade in those kind of market conditions. Okay, so day chart has a lot more data and it's a slower mover. So this is a week, and it took X amount, like 2 or 3 weeks, for this trade to pan out. Okay, so for some of you that might be a better schedule for you. All right, but like I said, these methodologies we just covered, all of them actually can work on any time frame. Okay, so let's actually go to the euro dollar here. Some of you might like the 5-minute chart, so you can use, like, again, we see on the 15-minute chart this is an overall downtrend. Okay, let's see if we can find a trend line on the 15-minute chart. Okay, it works the same way. You can use these scalping methods if you like to, but you can see that there's a low and a higher low. Okay, so we're in this general area here. Once you can establish this bull signal or bullish candlestick, okay, we can even kick down to the 1-minute chart if you wanted to, or even the 5-minute. I'm just pulling this all the way back to that area here. Okay, so that's the bull signal, that big white candlestick here. So the overall trend, let's actually change this to black so we don't confuse ourselves. That this is the overall major trend as the dominant trend. Okay, so what are we looking for on this time frame? Well, what we're looking for is that dip. Okay, this. I'll change this back to red. Let's actually go blue. Okay, back into the upper swing. Okay, what are we looking for? Okay, we're looking for a high and lower high. We're looking for that break. Okay, breakout trade. Boom. Oh man, do you see that? Pretty good stuff, huh? This one we don't really have a trend line to even draw right now. Maybe it might be a little bit in the future. Let's see. Okay, and you can see that the overall trend is that black line. So when you see that black line, okay, so thinking in a more live situation, you might see this and this. Okay, you've seen those 2 points, and I'm just giving you more of like a visual understanding of because again, this is something that you're projecting, right? That if it breaks this trend line, that this market is going to continue going upwards. Same general rules: entry at the break, stop loss there, take profit at the previous high. And I also showed you that cross trend line type of technique where you have a low here and then a high on the other side. Okay, right around here. This little high right here. So you have a break, and that's your target. So you have a low here, hits a high, that's your target. So your stop loss is right here, entry right here, take profit right there. Okay, so again, we have the black line below us as our indicator. So what we're looking for is a break. Okay, and you can see that this trade right here was a simple in and out and didn't win. Okay, and that might be something saying, okay, well, I won out of, let's see, how many trades did we have? 1, 2, 3, 4. About 4 out of 4 winning trades and 1 losing trade. So you gotta admit that that's a pretty good ratio. So as long as your risk to reward, and if you're consistently using like a fixed lot size that you can feel really comfortable with your account size. We'll talk a little bit more about money management in the next lesson. But you get my point, is that you're growing your account based on pips. Okay, so you just realize smaller time frame, smaller stop losses, as well as smaller take profits. Okay, this is 14 pips. This is 3 pips stop loss. So really tight entries and exit, as you can imagine. Okay, so if you like the scalping type of mentality, then this technique is just awesome for you. Okay. Now there's other strategies within scalping that's based on volume and just what the market is doing. Sometimes it ranges and then it breaks out. It's the same concept of support resistance trading, and like I said, you're just looking for a consolidation, the breakout. Okay, so this is just an example: consolidation. Here's your breakout. Here's your highs and lows. Are we creating higher lows or higher highs? We have a high and a lower high. We have a low and a lower low. That is your indication that this market is reversing. As you can see, it just drops off. Okay, same thing here. Are we creating a high and a low and lower low? So are we going to start? So this trend line right here was to get into sell off. Okay, same thing with this, the support, resistance, same breakout, consolidate, breakout. Okay. Well, I really appreciate you guys to be able to watch this video, and I really hope that you're really seeing results now and been implementing these trade methodologies. I really hope you can there's a calculator that I have. If you need it, just email me. I'll be posting it on the website for you to download, the money management calculator. It's very straightforward in using it. You just put in your lot size or your account size and what you're looking to risk. You can use it as a fixed lot size or percentage of the trade. Okay, and then you can simply place trades that way to again build your account. That's the whole goal. Alright guys, well, I hope you enjoy this presentation, and I hope you are enjoying these trade methodologies. Alright, take care.